through a little bit about who we are, different opportunities for being an entrepreneur in the US, as well as everyone's asking what's going on with COVID-19, what are the better business opportunities. So we'll review some characteristics first in terms of COVID resilient businesses, and then different industries, as well as we really don't think that every type of business is going to recover the same way. So from like a macro level, you probably have heard a lot of economists comment on different recoveries of the economy in terms of a U, V, Nike swoosh. I think it's going to be on an industry by industry basis, and we can go through that today as well. So first, who's Visa Franchise? We're based here in Miami, Florida, with offices with full-time staff in China, Mexico, as well as Turkey. Since we started the firm back in 2015, we haven't really strayed too far from our core focus and what we were founded on, which is identifying and analyzing businesses eligible. Can you hear me now? I just got a comment. Let's see. Okay. So we haven't strayed much from our focus on helping entrepreneurs find visas that qualify, businesses that qualify for the E2 visa. However, like this past 7 days, we've gotten 2 EB1C approvals. As Charles mentioned, it's like an L1 on steroids. One of them was the client invested $500,000, 10 plus employees. The other client invested over $600,000 with 40 plus employees across multiple education centers. So we focus on businesses for the E2, although we are able to work across your needs. A little bit about our track record over the last 5 years. We've helped over 300 clients from 58 different countries. A lot of our clients are dual nationals where they hold multiple citizenships. 5% of our businesses are past our vetted process. We've reviewed over 1,600 businesses to date. And these businesses have yielded over 2,000 jobs, created American jobs. Is anyone else having, is it isolated just to one? It seems like it might be isolated to one person having issues with the audio. In terms of small business options, we like franchises because it's a proven path. You have the initial and ongoing support of the franchisor, especially important for people that it might be their first time engaging in business in the US. There's some cons associated with the costs associated with gaining the rights to the franchise and ongoing royalties. Existing businesses, the good thing, it's already operational. You have an inherent customer base, historic financial figures. Many of our clients right now are taking advantage of the crisis. Well, they'll do a hybrid approach where it's an existing franchise, or they get a franchise and then working with the franchisor, they then go buy contracts or they buy out a business. So combining the best of both worlds, where it could be real estate property management, where you're buying contracts of a property management company that's might be going out of business or having issues, commercial cleaning, landscaping, etc. So we've seen quite a lot of that. And then obviously you could start a new business. If the business goes bad, you lose your visa. If the business goes absurdly well and someone buys your business, you lose the visa as well. So many of our clients have done that on the side, but it's definitely a possibility for those seeking these different visa options that Charles mentioned earlier on the webinar. A few of the characteristics that we look at, especially in this environment, is analyzing the profitability of the business, the unit economics, revenue, gross profit, net income, etc. We want to see periodic revenue. So to see that they're making money every month or every week, ideally from similar clients. High margin business, management team, industry and brand growth, as well as strong liquidity, and they have proper cash. If it's an existing business, it's going to be analyzed differently than if it's a new franchise that you would be opening up. And a few of the characteristics across the different COVID businesses that we want to see. I'll just go quickly through these, and then we can go over some deeper points and some of the historic figures we've seen in past crises. But efficient budget, secure payments, where they're getting that constant stream of revenue, and then leverage in the market that maybe they can expand as some of the weaker competitors are falling out. So here are a few industries with compelling business cases right now. We've seen, especially in the food space, a lot of delivery and takeout. We think that coffee, especially as large metropolitan areas go back to work probably over the summer, that commuters are still going to want their coffee, and they're going to want to regress to that habit that they've had in the past. On the pet care side, there are definitely some interesting segments in that space that we expect will rebound, maybe not as fast as other industries. Beauty, hairdressers, barbershops. I have to get a haircut as soon as I can, and when it's safe to see my barber. Case in point, cleaning, commercial cleaning services, maintenance, repairs. These are things that you're gonna have to have on an ongoing basis, regardless, and maybe even more so given the current circumstances. Real estate property management, the vacation rental sector has definitely been harder hit than long-term residential. Commercial, we'll wait to see. That could have some serious issues. Most of our clients, though, manage homeowner associations, which are a pretty stable source of revenue, as well as long-term residential. Business services, insurance, tax services, they haven't been hit so hard. They're migrating to their employees working remote, but they get those periodic revenues from existing clients that they have, as well as everyone wants to know from their accountant and tax preparer how to mitigate their tax implications. Education, childcare should bounce back. Definitely has been hit hard, as with school reinforcement, but we do expect those industries to bounce back strong. And then healthcare, urgent care, there are opportunities there that we see booming, especially as many doctors' offices are closed and the only other options going to an emergency room. One opportunity that we've spent a lot of time evaluating over the past year is the ghost kitchen. So we work with multiple franchisees that operate in the ghost kitchen space, which is in some countries, in the UK, for example, they call it dark kitchen. And essentially, it's a large industrial space with multiple kitchens that you can have multiple restaurants operating out of for takeout and delivery. And some brands have really leveraged this low cost and shared cost structure to continue having revenue as well as net income flowing down to the bottom line. One of our analysts looked at the Small Business Administration's loan details from the last 30 years. This is an ongoing project for us. And we isolated out the defaults from 2008 and 2009. The interesting thing is these defaults reflect twice the amount of defaults for the average 2-year period during the same 30-year period. Will this economic crisis be as bad as 2008, 2009? I'm not sure, but I'm sure that defaults for the year, 2 years around the coronavirus are definitely going to be higher than the average period that we see. That being said, let's look at some of the winners and losers during the last economic crisis. As you might imagine, some industries have been hit a lot harder than others during 2008, 2009. So real estate related franchises, especially in the hospitality space, hotels, had a really high default rate. The 20% of loan defaults over the past 30 years occurred during 2008 and 2009 for the real estate segment. As for food and beverage, it was a little over 15%. However, the majority of businesses defaulting were in the ice cream space. So think of things that are not essential and more of a luxury to go out. Ice cream, nail salons, some of these non-essential and more luxury type businesses are going to be hit hard with this current environment. And then this is borrowed from an economist that was talking more about the manufacturing rebound. And we do feel that a few different industries will have a similar V curve, including cleaning and maintenance, healthcare services, children programs, education programs, as well as business services. And then in terms of the next best scenario, we see food and beverage, health and beauty, and real estate. And that being said, within those subsegments, there are going to be ones that are more like a U curve and ones that are more like an L and are going to have a really long recovery. The Nike swoosh. So we're seeing a lot of industries that have been hit really hard, and it's going to take a while for them to really get back to where they were in 2019 pre-coronavirus. And they will recover quite a bit, but they won't over the next, say, 3 quarters, but they're not going to get to that elevated level for at least a year. And then there are certain industries that we see that they're going to have more of an L-type curve. So depending on the fitness center, if you're a fitness center that has regularly 50, 60 people in a small room and very close contact, I think that's going to be a very hard hit, and it's going to take many months to recover to the previous levels, as well as retail products and services. With the emergence of Amazon and more people getting used to ordering products on Amazon, this segment might never recover to what the pre-COVID-19 levels were. In summary, a little bit about us in terms of how we support the clients. We're with you every step of the way. We work alongside your advisors, whether it be attorneys, accountants, and our role is really on just identifying and analyzing the business opportunities, principally franchises, that best meet your immigration as well as investment goals.